Hello and welcome to this weekly market update. In just 2 minutes, we will show you all the charts, news and economic updates you need to support your trading in the week ahead. Let's begin with analysis of the latest price action.
EUR/USD quickly reversed its breakout above the October 19 to 25 peaks and reversed all the way to 1.153 support, which looks about to give way. GBP/USD has seen a major trend reversal, taking the pair back under 1.35. The September lows are major support before the onset of a longer downtrend. USD/JPY has so far held support at 113.2, but it looks less like a head and shoulders pattern and more likely a trend continuation pattern. AUD/USD double topped at 0.755 and is now making lower lows in what looks like a new downtrend. 0.738 is support before 0.731. USD/CAD has broken above 1.245 resistance as well as the 20 DMA and a downtrend line. The overall trend is still down but might have just reversed. XAU/USD is correcting lower in a down-sloping channel after a move up in October. Overall, the price is choppy with no obvious trend. Brent crude has now, at least temporarily, reversed its uptrend with a drop under 82 support followed by the 20 DMA acting as resistance and a drop under 80. The SPX 500 cash has continued to push higher with 4,700 now on the agenda. The old record high at 4,550 is support.
Thank you. And now for the top market moving news headlines of the last week.
Fed announces tapering. The Federal Reserve finally announced it would taper QE by $15 billion per month starting in November. Non-farm payrolls beat expectations. After 2 disappointing months, U.S. jobs growth accelerated in October, printing 531,000 with unemployment dropping 0.2 point to 4.6%. The dollar fell then bounced. The dollar dropped on Wednesday when the Fed signaled no plans to raise rates soon but rebounded on the strong non-farm payrolls data. No Bank of England rate hike. The BOE headed by Governor Andrew Bailey decided against the hike to interest rates that policymakers had been hinting was coming. Sterling sees a sharp drop. GBP/USD crashed back under 1.35 to its lowest since September after the BOE decision. Lagarde stays dovish. ECB President Christine Lagarde said it is very unlikely there will be a 2022 rate hike in the Eurozone. European stock indices breakout. France's CAC index hit a 21-year high, while the DAX hit fresh record highs as European earnings impressed. OPEC keeps outries steady. The oil cartel agreed to continue the current pace of output increases, despite pressure from US President Joe Biden to speed up. Ether hits a record high. The second biggest cryptocurrency by market cap hit a fresh record high, fully erasing the over 50% correction that began in May.
Thank you very much for that. Finally, let's turn to the top data releases in this week's economic calendar.
There are no central banks meeting this week, so it's all about inflation data. China producer prices are important because China exports this inflation across the globe as the so-called world's factory. Cooling China producer prices will help calm nerves about out-of-control global inflation. Probably the biggest news release of the week will be US CPI data. US inflation has been stubbornly high at 5.4% and explains why the Fed has opted to taper asset purchases. If inflation stays this high, the Fed might be forced to taper at a quicker pace than $15 billion per month, and that would lend support to the US dollar. Also worth watching for trading the British pound is UK third quarter GDP data. The pound was put under pressure by the Bank of England not raising rates and by the deficit spending budget announced by the UK Chancellor. Weak UK data could add to the sterling weakness.
That's it for now. Make sure to subscribe to our channel for all the latest updates and have a great week trading.